Hi, and welcome to this week's look back at the major stories that have impacted the markets. Well, where to start? It's relatively straightforward, I have to say. It's the UK's political drama and the impact that politics has on the markets. Markets are often called a roller coaster ride, but that's nothing of a ride compared to UK politics in the last month or so, but particularly in the last week. Both the Chancellor and Home Secretary have been replaced in the last few days, and the new Chancellor basically ripped up the mini budget that was given just a matter of days ago that really seemed to have a direct negative impact on the UK economy. On top of that, we had the Home Secretary resign yesterday, taking a little bit of a dig at the incumbent Prime Minister, who just in the last couple of hours has herself resigned. That's Prime Minister Liz Truss has now resigned, or pushed, as many people would say, after just 44 days in office. Now, I believe that to be the shortest prime ministerialship ever. This is all happening at the same time. Inflation is over 10% and it is highest for 40 years. We've got the Bank of England expected to increase interest rates next month. That may be viewed, though, as a little bit of catch-up, because we've got the EU and the US coming out in the next couple of weeks. With the latest news about the Prime Minister only just being digested, will we see the UK 100 decline into the support zone that we've been seeing on some of the charts? Or, strangely perhaps, will the latest twist in the UK politics scene be seen as a positive piece of fundamental news and fuel a meaningful rebound? Now, some people are saying, and some city analysts are saying, that this wasn't so much about Liz Truss's personality, more about the policies, which have already predominantly been ripped up. But with a statement coming out at the end of the month, if you like, the fiscal statement, got to get a new Prime Minister in before then, got to allow the new Chancellor, who has said that he's going to stay as Chancellor and not enter the leadership race, which sort of calms the markets a little bit. But the rate at which things are moving, I think it's fair to say, watch this space. Now, our second look back is actually going to be something I've already mentioned, which is that UK inflation is now officially over 10%. Official figures came out Wednesday, I should say, which shows inflation currently at 10.1%. That's a 40-year high. Now, unofficial figures have showed this for some time, but it's the official figures that tend to impact the markets and have the reaction that we expect. Now, whilst the news outlets made a big deal of this over 10% inflation rate, the markets didn't seem to make such a big deal about it. And we didn't really see an impact on the rate of sterling against US dollar or the euro. Now, that would indicate that it's not a surprise, and maybe it was already factored in. Let's be fair, there's been talk about it for quite a long period of time. And we know that surprise equals volatility, and we didn't really see that. I mean, it's still not a good sign for an economy in decline. And that cap with a government U-turn on the mini budget shows both a country and an economy pretty much in turmoil. Well, at the moment, even with this inflation news and what's just happened with the Prime Minister, sterling against the dollar is still above 112, okay, so which has always been a key support level. Haven't quite hit the highs of 113 again, but it doesn't really seem to be having a huge negative impact as things stand. Has it bottomed out? Is it business as usual now for sterling? Well, I think with other news coming out and the turmoil and the changes that are happening at such a rapid pace, nobody can say for sure. So, as ever, keep your eyes on the market and keep your risk management strategies intact. Okay, now if we dare, we're going to turn our attention away from the UK and all the happenings just briefly and take a look across the pond at the United States. Now, there seems to be a semiconductor war between China and the US brewing. Certainly new momentum in the economic rivalry between these two global superpowers. This week, US authorities have banned a number of American companies from supplying equipment and modern chips to China. And they've also banned these companies from the use of chips made outside of the US. Now, rumours also suggest that Americans working in the semiconductor industry in China have been asked to return home at risk of losing their citizenship, which is, why they're probably still rumours, but quite a major statement. Now, the major chip manufacturers such as Nvidia seem to have ridden this little bit of news, little bit of momentum quite well. But this was delivered against a background of the Congress of the Chinese Communist Party, where Xi Jinping, apologies if I've pronounced that incorrectly, said the next 5 years are critical for the growth of China. They need to work faster and harder to upgrade the military, both in terms of machinery and thinking. And they strive for a peaceful reunification with Taiwan, but never promise to renounce the use of force. These are quite big, bold statements coming out of China, and obviously not directly correlated to what the US is doing in terms of semiconductors. But I think this has got a little bit further to run. In the background, we have got the Hong Kong share index, which shows itself in chance to be an oversold market. So potentially could be looking at a little bit of a bounce there. But this news coming out of the States could well impact that. So keep your eyes on news between China and the US in the coming weeks. Okay, for our final look back this week, we're going to stay in the US. And a story actually that's not overly dissimilar to the one we've just looked at, with the US trying to perhaps regain a little bit of control of the semiconductor market. But what we're seeing is the US is now putting pressure on the oil price. The US Department of Energy, presumably in agreement with the Biden administration based on what they've said previously, has announced it's going to sell 15 million barrels of oil from the US Strategic Reserve. One aim there, of course, is to increase supply and thus lower the price. This comes during a time where we know the US is struggling with inflation, and they're putting pressure on Saudi Arabia in particular, who are making steps towards Russia, because they want to reduce production in the OPEC plus oil countries to keep that price higher. Now, we even had commentators on CNBC saying that the next step could well be an additional release of 100 million barrels to lower prices further. Is that pricing an expectation of a decrease, or has it been taken, soft-handedly? Well, the futures chart shows the price, in fact, has been in a downtrend since mid-September. There was a rise in the price off the back of high volumes on October the 7th, but that turned into a bull trap. And in fact, we saw a test of the upper channel line. Now, the US is suffering with inflation. The economy's doing reasonably well, but clearly I think Joe Biden now trying to use the administration to increase productivity in the US and try and control inflation. We're obviously expecting the FOMC to raise interest rates as well in the coming couple of weeks. Interesting times ahead, so many different geopolitical concerns coming to the fore, rising inflation across the globe. These are stories that aren't really going to go away for some time. Take all of this information into account for your week ahead. Keep your risk management strategies in place, and we wish you luck.